Rohr here with an early global view on January 15th, 2015, Thursday morning at just before 7 a.m. U.S. Central Time. Coming just a bit later today because we wanted to assess the impact of the Swiss National Bank just summarily pulling its ceiling on the Swiss franc, which mostly is targeted against the euro. So once the Swiss no longer were keeping the value of the Swiss franc down against the euro plummeted against the franc, and that attracted selling to the euro against other currencies as well. And we'll get back to that later. So, what does all this mean to the markets? And what we know on this hourly chart on the left, 30-minute chart on the right, is that the S&P got right down to our 1985 important level that we've been watching since the sell-off in early December, when the market was below it into the FOMC back on December 17th. And then pushed up from there on the positive FOMC influence. Last week, Tuesday, got right back down to 1985, and that level, as you'll see on the intermediate term charts, actually has a buffer down to about 1978. And once again, before the Wednesday release of the FOMC minutes, it pushed up and left an up break around 2005, and then after pushing back up into the 2050 to 2060 range, left a down break going back to last Friday after the employment report because of the weak hourly earnings number, and was up on the positive news here yesterday, on Tuesday morning. Right up back into 1950 to the breakout of 52, and then the negative psychology took over on various global influences and drove it all the way down back to the 2005 level, from which it tried to hold, but then overnight, yesterday morning's weakness of the U.S. retail sales put it below 2005 for the next test of the 1985 to 1978 range. Of course, never quite got to 78, but it did get around 85 to just below it before bounding up. And it's been a very interesting overnight trade, because actually these factors that started to feel more positive late yesterday left it up as high as 2027 in overnight trade, right around that level. And the right into the U.S. Central Time 3:30 a.m. announcement, so 9:30 in the morning, 10:30 in the morning in continental Europe, it actually made it back down to 1987. So it retested the upside reversal from lunchtime yesterday. Currently, it is off $5 at 2002. Still looking like it's trying to remain a big trading range market unless it gets below 1985 to 1978. On the upside, the same classical resistances apply. Back up at about 2013 to 15. Again at 2025 is an interim level. And the bigger resistances right back up at 2036 to 40, 2050, and 2060. And it's going to be interesting to see if it can clean up from the lower overnight activity during the day today, because, of course, after washing out below this 2005 up break and the gap lower, of course, it left the high of the bounce here around 2007. It would need to get back above that and sustain some strength to also take the short-term hourly MACD back off the violation of its lower runaway band. It needs to get back above this to diffuse the downside momentum. So it's going to be a very interesting day today into that U.S. data. And that pretty much does it for the short-term view of the S&P 500.